Hello guys, welcome to Tahir Tech. Today's our topic is flood insurance. Because of frequent flooding of a Mississippi River during the 1960s and the rising cost of taxpayer-funded disaster relief for flood victims in 1968, Congress created the National Flood Insurance Program. It has three mandates to provide residential and commercial insurance coverage for flood damage, to improve floodplain management, and to develop maps of flood hazard zone. While the comprehensive section of an auto insurance policy covers flood damage to vehicles, there is no coverage for flooding in standard homeowners renter or commercial property insurance policy. It is valuable in a separate policy from the NFIP and form a few private insurers despite effort to publicize this. Many people exposed to the risk of flood still fail to purchase flood insurance. It was the widespread flooding associated with Hurricane Katrina in 2005 that drew attention to the NFIP and set in motion debate about how to improve it. So far, Congress has not taken steps to significantly revamp the program. Federal flood insurance is only available where local government has adopted adequate flood plan management regulation for their floodplain areas as set out by NFIP. About 2,400 communities across the country participate in the program. NFIP coverage is also available outside of the high hazard area. The NFIP law was amended in 1969 to provide coverage for mudslide and again in 1973. Until the purchase of flood insurance have been voluntary with only about 1 million policy in force. The 1973 amendment put constraint on the use of federal funds in high-risk floodplain, a measure that was expected to lead to almost universal flood coverage in this zone. The law prohibits lenders that are federally regulated, supervised, or insured by federal agencies from lending money on a property in a floodplain zone when a community is participating in the NFIP, unless the property is covered by flood insurance. Legislation was enacted in 1994 to tighten enforcement of flood insurance requirements. Regulator can now find banks with a pattern of failure to enforce the law, and lenders can purchase flood insurance on behalf of homeowners who fail to buy it themselves, then bill them for coverage. The law includes a provision that denies federal disaster aid to people who have been flooded twice and have failed to purchase insurance after the first flood. Building constructed in a floodplain after a community has met regulation must conform to elevation requirement. When repairs, reconstruction, or improvement to an older building equals to or exceed 50% of its market value, the structure must be updated to conform to current building codes. A 2007 NFIP study on the benefit of elevating buildings showed that due to significantly lower premium, homeowners can usually recover the higher construction cost in less than 5 years for homes built in a velocity zone where the structure is likely to be subject to wave damage, and in 5 to 15 years in a standard flood zone. The Federal Emergency Management FEMA estimate that buildings constructed to NFIP standards suffer about 80% less damage annually that those not built in compliance. How to work? The NFIP is administered by FEMA, now parts of the Department of Homeland Security. Flood insurance was initially only available through insurance agents who dealt directly with the federal program. The direct policy program have been supplemented since 1983 with the private cooperative arrangement known as Write Your Own, through which a pool of insurance companies issue policy and adjust flood claims on behalf of the federal government under their own names, charging the same premium as the direct program. Participating insurance receive and expenses allows for the policy writing and claims process. The federal government retains responsibility of underwriting losses today. Most policies are issued through the Write Your Own program, but some non-federally backed coverage is available from the private market. The NFIP is expected to be self-supporting in an average loss year as reflected in past experience. In an extraordinary years, Hurricane Katrina demonstrated losses can greatly exceed premium, leaving the NFIP with a huge debit to the US Treasury that it is unlikely to be able to pay back. Hurricane Katrina losses and the percentage of flood damage was the uninsured led to call for a revamping of the entire flood program. Thank you so much for watching my video. If you like my video, please subscribe my channel and press the bell icon for future video update. Thank you so much.